What's up, everyone? It's Caddy with MoneyVest. So markets here pushing higher a little bit, and we did have the FOMC minutes coming out today. We also have the inflation numbers coming out tomorrow, and we had the PPI numbers coming out earlier today as well. So you got lots to unpack in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And again, the links to our Discord and Patreon is going to be down below. We'd love to have you on board as a MoneyVest member. Our engagement has never been higher, so you will be able to access all the channels, including the stock reports, including the alerts. We've been buying a lot of TMF lately because I do believe the yields to some extent in the short medium term have seen a little bit of a high, and we have seen a bit of a pullback, but that doesn't mean that I don't expect them to go even higher. I did a poll on my Instagram, so make sure that you do connect with me there if you want to participate. And again, I'm sharing a lot of updates and insights on Instagram and Twitter as well. So links are going to be down below if you want to connect with us over there. But like I said, there's going to be stock reports included. And for this week, our focus is going to be 5 new stocks in mode: Lululemon, Viva Systems, and Dava. And there's one more, Chipotle. That's going to be our focus, and these stock reports are going to be uploaded onto our Discord, and you can access them online and have those discussions with all the members as well. And this right here was something that I shared in our Discord earlier, so you can come over here, check that out. So total messages sent, 33% increase compared to last week. We're averaging about 800 plus messages across the server. So it's literally just popping a lot, and there's a lot of really insightful discussions happening in our community. So again, if you want to join, link's going to be down below. I've opened up a couple more spots for the month of October. Now, the Fed officials see restrictive policy staying in place until inflation eases, the FOMC minutes basically suggested. I also did a video earlier going over the 3 members, Christopher Waller, Neil Kashkari, and Philip Jefferson, and what they mentioned in their speeches. And they basically disagreed that, the 10-year yield, the spike in the 10-year yield is not doing the Fed's job, or some of them suggesting that it is doing the Fed's job, and so the Federal Reserve doesn't need to raise interest rates as much as what they expected before. But there were conflicting opinions on the need for more policy tightening. There was unanimity on one point that rates would need to stay elevated until policymakers are convinced that inflation is heading back down to 2%. A majority of participants judged that one more increase in the target federal funds rate at the future meeting would likely be appropriate, while some judged it likely that no further increases would be warranted. And the document noted that all the members of the rate-setting Federal Reserve Committee agreed that they could proceed carefully on future decisions, which would be based on incoming data rather than any preset path. And again, this is the language that we have already heard from the Federal Reserve. Data dependency, focus very much on the incoming data. They're going to proceed carefully, and a lot of participants kind of agreeing to the idea that rates need to be higher for longer. In other words, they need to stay elevated for some time until inflation is on its way down to 2%. But there is some uncertainty and some conflict with regards to whether rates need to go up another 25 basis points or not. Time will tell. Tomorrow's inflation numbers will have a huge impact on that as well. And this right here is the consensus. So 0.3% expectations month over month, year over year at 3.6%. Ex food and energy, so core inflation's at 0.3 and 4.1% on a year-over-year basis. So these right here are the consensus for the big Powerball numbers tomorrow when it comes to 8:30 a.m. Eastern, and I will be live to cover those numbers. Very important stuff coming out. Now, this right here is the month-over-month rents. So rent CPI has finally peaked and is beginning to recede. This was according to apartmentlisting.com. And what they have over here is the CPI top-line inflation, like in other words, headline inflation, CPI rent of primary residence, and then apartment listing national rent index. So what this is basically showing us is that we have seen in September rents down 1.2%. And of course, as of August, we've got CPI for rent up 7.8% on a year-over-year basis. And then in August at 3.7% for headline inflation. So there are some lag effects which are not really showing up just yet, because even though apartment listing national rent index and the median rent is down on a year-over-year basis, it's not showing up in the actual headline inflation, not to mention the CPI of rent of primary residence either, right? So it's not showing up yet. But eventually, if it starts showing up, since it makes up over a third of inflation overall, that could have a pretty significant impact on overall inflation and prices. And that's exactly what Jeremy Siegel, Kathy Wood, and a lot of other folks have mentioned, that because of these lagging effects, the Federal Reserve is doing too much, and eventually there is a possibility there's a bigger deflation risk in the economy, which of course hasn't materialized yet. Now, this is something that I wanted to also go over. This was, again, as of October 10th. Hedge funds continue adding to their short U.S. Treasuries future position, which has now reached the largest short position in history. So that, again, is quite a significant headline, because not only do we have this as being the worst bond market sell-off in the 250-year history of the U.S., this is also the largest net short position that we have seen from hedge funds on U.S. Treasuries. And guess what? I am on the opposite side of the trade, because I am buying TMF, and I actually do believe there is a possibility for both a short squeeze, and eventually when the rate gets cut, especially on the short end of the curve, and then long end will follow as we start to uninvert, there is a possibility for yields to top and start moving back down. And of course, for bond price ETFs to start moving back higher, because they move in inverse to each other. And that's also one of the reasons why I did that poll on Instagram. I basically asked my audience, where do you think, or who's going to call the top on treasuries, and how high do you think it's going to go, right? There were different, options between 4.75 to as much as 6%. And right now we're sitting at 5.25 as the consensus among the audience on Instagram that I have. Again, feel free to connect with me there. Link's going to be down below if you want to participate. But I don't doubt that at all. I think, if there is continue to see supply in the market, kind of from the government side, fiscal policy side, it continues to kind of hit the market with all these issuances, and the demand isn't as strong as what it used to be, or at least right now, it's just there's a huge imbalance, and economic growth and inflation expectations continue to be on the rise. There is possibility that yields continue to struggle a little bit, and they pushed higher, and bond price ETFs continue to see lower lows and hit new 52-week lows moving forward as well. So there is definitely a possibility for us to see more potential pain in the short, medium term. But over the long term, we're talking, 2024 and onwards, there is, in my opinion, at least a possibility that yields will top, start rotating back lower, and that's what's going to drive this bull market in the bond market. So again, time will tell. It's a more of a macro tactical play. I think we need to be patient, but this, again, hedge funds are definitely not pulling back on any punches here. They're adding to their net short positions. Has become the largest short position in history. So that could also lead to what? The largest short squeeze in history. You never know. So Nvidia here, Google, Meta, Apple, Microsoft, Eli Lilly, Amgen, a lot of stocks pushing higher. Tesla was flat on the day. So this right here, a lot of individual stocks, especially Novo Nordisk, NVO, pushing higher significantly. There was some catalyst with regards to the weight loss drug. But medical devices, we got energy prices rolling over, so energy stocks coming down. And this right here, we got every sector green except for healthcare, defensive, and energy. And over the last 1 week, we've got consumer defensives is the only sector that is underperforming. And over the last 1 month, we've got comm services as the only sector that's actually up, and it's outperforming. So soybean pushing higher. We got lumber prices, you got feeder cattle, palladium, natural gas, all pushing higher with soybean oil, orange juice, volatility. We got lean hogs, ethanol, sugar prices, everything's selling off. Bitcoin here just a little bit under 27,000, and Ether just over 1,500 as well. Now, IRS also said that Microsoft owes an additional $29 billion in back taxes. That is actually a pretty substantial number, because if you come over to Microsoft and take a look at their profits, right, take a look at their net income, that was $27 billion. So $29 billion is actually a pretty substantial number. So 29 divided by, let's just do 70, we're looking at 40%. 40% of last year's income, net income, profit, is what the IRS is saying that Microsoft owes in back taxes. I guess they're not holding back on anything, right? They're going after people, they're going after businesses to try to recoup whatever tax receipts they can get because of massive fiscal deficits, right? It's not surprising. And this right here is what Microsoft mentioned. They plan to contest the notices through IRS's administrative appeal and is willing to go to judicial proceedings if necessary. And they said, and I quote, Microsoft disagrees with these proposed adjustments and will pursue an appeal within the IRS a process expected to take several years, and we believe we have always followed the IRS's rules and paid the taxes we owe in the US and around the world. So, because it's a pretty big number, $29 billion is not small, right? I mean, if you look at it from the grand scheme of things, most companies aren't even worth $29 billion, let alone having to pay taxes that much. And Microsoft, since it's one of the biggest companies in the world, even then, 40% of profit is what's being asked of from IRS. So, it's a pretty substantial number. Microsoft on this news, I don't think was down or anything. It was on the day up over 1.2%, so getting back up to that lower high. After hours, it was slightly down about 44 basis points, coming back down to 331. In fact, it was a little bit lower after hours. So if you come over to 30-minute time frame here, or even 5-minute, so you'll notice that we did actually drop down to 328 before pushing right back up. So that's where we are with Microsoft. So going back over to the markets here, S&P 500, and just want to make sure there's nothing else for us to focus on. Nope. So one more thing I want to mention is the PPI numbers. So PPI came in a little bit higher than what the expectations were. So we came in at around 0.5% month over month versus 0.3% consensus. And year over year, we came in at 2.2% versus 1.7% consensus. So we certainly did see the PPI numbers come in a little bit hotter than what the expectations were. But this is not as much of a bigger catalyst than CPI. CPI definitely has a much bigger influence on the overall market than compared to the PPI. Now, when it comes to the market, so S&P 500 on the way up, so 4 consecutive green days in a row. Next targets all the way up to 4450. So this is also the target that I mentioned in our Discord, so 4450 to 4500. That's another 2% potential upside for the S&P 500 that is possible. And that's exactly what we are paying attention to right now, because we are still in the context of this downtrend of lower highs and lower lows. So support level very nicely getting validated at 4200 in line with that 200 SMA. And that next resistance, like I said, is going to be sitting at 4450 to as much as 4500 for the S&P 500. NASDAQ also in a very similar trajectory, up over 71 basis points today. And this right here is the lower high and the lower low. So next resistance and target is going to be at 13,850, closer to 13,900 for the NASDAQ. So this right here is going to be that level to watch. And of course, support level is going to stay put roughly around 13,150 points on the NASDAQ. So that's going to be the level to watch. And of course, that's the next target is still within the context of this lower high for NASDAQ. Apple here coming up to 180, so it's coming up to that resistance. So tomorrow is going to be very, very interesting, whether we get a breakout, whether we get a rejection from Apple. But right now we are once again getting back up to that resistance at roughly around 179, closer to $180 per share for Apple, and we're still within the context of this downtrend of lower highs and lower lows. Talking about Amazon, so Amazon here also on a very nice move back up, 1.8% rally. And right now starting to come back up to this gap, which it will eventually fill, in my opinion. And the resistance is going to be all the way up to $138. So this right here is going to be that lower high and lower low. So still within the context of this downtrend, but seeing a very nice move back up. And that lower high is going to stay roughly around 137, 138. Tesla, on the other hand, got a perfect rejection. So if you come over to the 30-minute time frame, you'll notice that Tesla, in fact, got rejected perfectly at that lower high once again. So if you come over to the 5-minute chart, you can see it far more clearly as we got rejected here yesterday. And then today we got up to that level at around 268, 269, getting rejected and then literally just selling off over 2.8% intraday from that lower high. So we're still very much in the context of this sort of downtrend of lower highs and lower lows. So not only are we getting rejected at this lower high, but we're also getting validated at this higher low. So, that's the level to really be watching for Tesla as we continue to kind of trade and coil inside this sort of pattern. Earnings are coming up next week. So it's going to be a very, very critical week, as we are also going to be dealing with a lot of supply and resistance in the 280s to as much as 320. So that $40 range, very, very important for Tesla. And of course, support level is going to stay put at 240 all the way down to $212 per share for Tesla. Talking about PayPal here, PayPal on the day, very, very flat, up over 61 basis points. So, continues to consolidate sideways in that range. Support level is going to stay put roughly around $57, $50 per share. and that's the lower high and the lower low, and resistance is going to be all the way up to $65, and support level is going to stay put roughly around 56, as we have already discussed in our previous videos. Square continues to move higher, so another green day for Square, so very, very nice move to the upside, and from lows of about $41, it's gone up over 15%. And the next resistance is going to be at $52 for Square. So that's going to be that next level and next target to watch. And right now, of course, support level stays put in the low 40s for this company. Talking a little bit about NVIDIA. And NVIDIA here continues to consolidate sideways, but a very, very strong move back up. 2.2% rally here and coming up to that resistance now in the 480s to as much as $500. So that $20 range for NVIDIA is where that resistance is. So inside this sort of red rectangle is where we are coming up to, and support level is going to stay put in the low 400s for NVIDIA. So very, very strong support there. Resistance all the way up to 485 for NVIDIA. Advanced Micro Devices, on the other hand, getting a little bit of that pushback, and resistance is going to stay put at 112. So very, very important level of resistance for AMD at those levels, and support level is going to stay up roughly around $98, close to $100 per share for the company. So a little bit of that consolidation. We have seen very nice green days and some breakouts for AMD more recently, but resistance is going to be at 112 in order for us to see higher highs. AMD needs to break out above this resistance so that we can actually see a shift in the overall trend and start seeing some higher highs and higher lows. Meta, on the other hand, starting to break out very, very nicely. So congratulations to all Meta shareholders. It is going up on some decent volume as well. So very nice move, almost 2% green here. And the next target and resistance is pretty much going to be that next level at 350s for Meta Platforms. So very, very nice move to the upside. It did, it was trading in this lower high and lower low pattern, then it consolidated sideways and a very nice breakout, and we're now actually going to see some higher highs for Meta Platforms as well. So very nice move to the upside. Support level is going to stay put at 312 to as low as 293. We still have a few gaps all the way down here in the 150s and 200s. Doubt that Meta's going to get down there anytime soon, but next resistance and target is going to be at 350 for Meta Platforms. Netflix, on the other hand, is breaking down. So Netflix down almost 2% here, and it's now starting to break down below that 200 simple moving average and starting to roll over even further. And the next support is going to be down to $332 per share for Netflix. So that right there is going to be that support level to watch, and resistance stays put at $398, close to $400 for Netflix. Now talking about Google, and Google here on the day also with a massive breakout, 1.8%. So there was a lot of moves to the upside. Amazon, Meta, Google, Microsoft, NVIDIA. A lot of these companies making very substantial moves here intraday, and of course, as a result, NASDAQ did really well. And we did have, of course, Google here pushing up over 1.8%. The next resistance is going to be all the way up to 144 for Google, and support level is going to stay roughly around 139, closer to $140 per share for Google. And that's exactly one of the reasons why I did actually dollar cost average into VUG last week a little bit more than usual, because there was potential for us to see that recovery back higher for a lot of these big techs, considering how oversold they really were. But Google here, a very, very nice streak of uptrend going from 128 to 141. Nice 10.7% rally here in the last couple days. Next is going to be Microsoft. We already touched on this, but Microsoft here also starting to break out from this lower high, and the next resistance and target is going to be at 340. So that right there is going to be that level to watch for Microsoft, and support level obviously stays put at $311 per share. So that's where we are with that previous resistance, and of course starting to break outside of this lower high. And now we get to Shopify. Shopify here just really consolidating sideways, and support level is going to stay put roughly around here at around $53, $54. I'm trying to switch Shopify, unfortunately, into these market updates into something else. If you have any other stocks in mind, comment down below, and any other sort of like companies that kind of fit that big tech criteria. Companies that are profitable, that are showing signs of actual momentum. I mean, Shopify has just been... It's been all over the place when it comes to profitability, so I'm trying to switch Shopify out for a different stock into these market updates. So if you have any companies in mind, let us know down in the comment section below. And last but not least, we got Enphase Energy. Decent day, up over 2.2%, so not bad. We'll be looking to add more here, dollar cost average in this good deal area inside this green rectangle, and we'll continue to monitor Enphase as well. So hope you guys enjoyed this video, found it helpful. Tomorrow's the big day. We've got big inflation numbers coming out, so be ready at around 8:30 a.m. Eastern, as I will be live to cover these numbers. And don't forget, join our Discord, join our Patreon if you want to get access to all the members only private videos. There's over 42 lectures, multiple stock reports that you can download, that you can pretty much view online on Google Docs, and of course our members only private videos, the trading view charts, a lot of the analysis and research in our Discord community with over multiple channels in the server and a lot of engagement and communication as well. So links are going to be down below. As always, happy investing. I'll see you all in the next video.